Thank you. Thank you. Well, hey, I'm excited, Maddie. I know I got a bull. I know I got a bear, and then it's wild card round. I've yet to
Mm,
decide where we're going that last
I,
round. How about you?
I'm staring at a few bulls. I'm staring at a few bears, and I'm like, am I two bulls and a bear, or am I two bears and a bull here? I don't know. I'm kind of legitimately open on my third pick wild card, so I'm gonna go bull bear, and then leave it open for that last one here, Frankie.
Like
How
it.
do you want to start?
Yeah, let's do it. Let's do it. Let's see your bull. Let's see your bull.
Well, if we're gonna do the easy bull here, I'm gonna go with the easy bull. I'm gonna go with Newmont Mining here.
Ooh, good
I
call.
don't get me wrong. Love Barrick Gold, Newmont Mining, the two biggest companies in the space, both great for covered calls. Both have been tackle 25 stocks. Most of the time, it's Barrick Gold. Barrick Gold's kind of the mainstay there from a covered call perspective. In my estimation, a little bit better than Newmont Mining on the covered call, but Newmont Mining and Barrick both setting up here on a potential breakout, but I like the combination of the breakout on Newmont slightly better than the one on Barrick here. We're getting up above the 200-day moving average. Obviously, we've already talked a lot about gold here today, finding that $2,000 level, thinking about where it can go. Well, when you're looking at this pure technically on the daily chart here, a breakout of 49 here, you really don't have anything on the daily chart. Let's get a little bit more time frame here. You really don't have anything until you start working up into that 54 level here. And when you're looking at that breakout here against the 49 handle, it's not just 49 against this little ding right here that I'm looking at, right? We see that as a resistance point, certainly, but you also see that as a resistance point. You see that as a resistance point. You see that as a slight resistance point. You had a battle there of 49 before multiple different times. And so when you're looking at this handle right around that 49, it's not just that, it's all of that right there that you're breaking
Mhm.
back up above. And when you look at that, that's why I like the combination of the breakout on Newmont a little bit more. When you look at that on a weekly chart, you can kind of see that pivot formation really kind of forming up right there. And then you see it open up again all the way into that 54. Now, the one technical situation you got to navigate here, which would be T1 for me, Frankie, is 52. And so you do got one moving average right there at 52 that could play a role in that journey up to that 54 handle. And so I just like a really simple breakout with a little bit of that catch up analysis on gold. It's going to be a choppy environment if you're going to trade in this environment, but that's where some opportunities truly do live, is in that choppiness and in that volatility and breaking out of it. Because once again, what clears up a lot of chop, breakouts clear up a lot of chop. But just looking for a simple breakout of 49, targeting 52, the 50 period on the weekly coming down. Ultimately, though, I do believe we're going to be working up into that 54 handle. Stop loss placement, I mean, you got a little bit of room because T2's up into the 54 handle. You got a little bit of room, but a couple different options for you on stop loss. Number one is if you ever want to just kind of look at the momentum and say, I don't know where to put a stop loss, you can easily just go to the low of the candle you're looking at, get a stop loss under that. And that stop loss also gets in it. It's hard to see here, Frankie, I know, but you got
Yeah,
that
I
50
just
period moving average right there with the 200 moving average. Anything underneath 48 makes some sense for me. If you want to get all the way underneath 47 to remove any of that volatility, if you're looking really at 54 and don't want to get stopped out prematurely, you got that 47 handle right there where the 9 EMA is. And that 9 EMA has played a role. Look at it getting close to the 9
yeah, it
EMA,
has.
double wick bottoms around that 9 EMA. And so if you're aggressive, you get a stop loss underneath the low of today. If you're a little bit more conservative, that stop loss goes underneath 47. But Newmont Mining is my pick of the week in the gold area of the market. There's a couple
Yeah,
other gold
that's
stocks setting up too, but I like Newmont here on the
yeah,
combination.
I can see why you chose them as the one you like the best. I mean, that's just really clean. I had the exact same, ideas as far as targets go, looking at that 50 weekly at about 52, and then that old high in that 54 range. So you sold me on this. That history at the 49, that is real. That just it's been there so many times. We've seen really good
It's
price action off of
ding,
it.
ding, 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 ding. So it's above the 49 handle. But what's your first one, Frankie?
You know what? You went gold, so I'm gonna go. I'm gonna go tech, and I'm not gonna go to the biggest name out there. I'm going with CERT, CERT. a little momentum play here on these characters. They've been in a nice trend for a while, right? They had an ugly bottoming pattern on a good earnings report, and it's really been off to the races ever since. Huge move up on the next earnings report. Now we're kind of getting into that. Wow, this is not a boring stock, right? But we're drifting back into that 90 MA really for the first time in a bit, which gives us a nice constructive, low risk, high reward type of entry, right? Playing into the momentum. If I pull back into that 9, if I flag into that 9, I can get in relatively, quickly, and I can get a stop loss relatively aggressive, right? Just kind of below that, which means my risk to reward should be really, really solid. So I'm just looking at this candle, Maddie. I think we're completely building it off of today's candle, above today's high, below today's low. That 9 will be below that. We'll line up with that probably on Monday. If you wanted to, drop it down a few pennies just to make sure you got the 9, fair enough. But fundamentally, looking at today's candle high low for entry and stop, and then targeting wise, we punched through this resistance, so I'm not overly concerned. They do have some history here in that 24 range, right? But they punched through it on the way up. They pulled back to it on the way down, so I'm not overly concerned about that. If I was, I probably would be putting this more on breakout analysis a week and a half from now, but I'm not worried about that 24 handle. So I think you're targeting back up to this recent high, right? Easy T1 at that recent high, just shy of $25. But ultimately, I think you are targeting beyond that. I think you're targeting into the 26. Now, it opens up quite a bit. There's a lot of chop in days gone by, up above here, but really opens up quite a bit as we kind of, clear out of this 24 zone. I like 26, not going to be too terribly aggressive, but I could see cases for a little bit higher than that if I were willing to give it a little bit more time. But to make it easy on myself, in above today's high, stop loss below today's low, T1 at 25, T2 at 26.
Frankie, you can make a legitimate argument for 30 on that chart above 25, like, because the previous pivots, we can all debate previous pivot analysis, but they're all in that kind of 25-ish zone, right? So I love your first target into the 25 because that is a rock solid resistance zone.
Yeah, just an easy one, right?
And it does open up, whether you're saying 26, 27, 28, 29, 30. I mean, pick your poison there. It just opens up and has that ability to get up. And I also love your analysis on, hey, this is a bull flag. And when you're looking at all this, the gaps and everything, at the end of the day, you got a bullish trend, you got a bull flag pattern, and you got a slowing momentum candle at the 90 MA, and your analysis was basically spot on. I was drawing the above the candle high and below the low, and you were doing the exact same thing with your conversation. And we're just playing the candle, guys. Minimize everything else on the chart. We're just playing this candle. Everything else is just leading to where we think it's going to go. But when you look at just that candle here, you're just basically saying, all right, I'm going to play the top and the end of that candle. And so if you're looking at that from that perspective, you're just saying, get me a entry above the candle. So we get triggered into the trade. If we get some degree of confirmation with that, some degree of upward momentum on the intraday perspective, getting a stop loss right underneath the 90 MA, really like the trade. It was a good find, Frank.
So I'm glad. Yeah, I was excited to find it.
Awesome. All right, Frankie.
So you got a bear for me now.
And I got a couple bears. I can't decide which one I want. I got to look at them very quickly. So I'm going to put a couple on the radar. TWLO, Frankie.
Yeah.
I disagreed. I'm going with TWLO.
It's a good one. It's a good one.
Yeah, and I got a couple other clean base, low bases that are really, really, really good as well. I'm going to save those for the scanner report meeting. There's about 4 low base breakdowns that are pretty rock solid. This one's right there with them, though. TWLO here fought the good fight, got absolutely stuffed out here. Double top, double bottom analysis, low base, allowing that moving averages to get above the price. Now, as we break down, think about everything we talk about, what I said about crude oil earlier today, or the Russell 2000, or whatever we're talking about on the downside. Give a reversal time and those moving averages will converge to a better breakout. Same conversation here. allow that 50 period moving average, just flip it upside down, obviously, allow that 50 period moving average to catch up, and all of a sudden the breakdown is now clean. You're not finding some random moving average here. You're now underneath all your momentum averages, all your resistance support moving averages. And there really does look like we got a pretty decent continuation trigger right underneath 60 here, Frankie. And so entry right underneath 60 gets it outside that support chop at 60. And then there's really legitimately nothing until you start working into 55. You start working a little bit lower into 50. You come out on the weekly chart. It's going to be a little bit of a different perspective here on the weekly chart because you got the 20 period moving average right there and about that 56 handle. But Frankie, that's still a legitimate 4 points on the daily chart before you run into that 55 handle. And so it's right in the same zone on that 55 56 level here. And so T1 here 55 56, you break through that, then you work into 50 here, like the entry underneath 60. Stop loss, I just like it right above the candle. I think you just played the candle as well, and your expectation is that 9 EMA is going to come down and get underneath that price action on Monday, Tuesday next week. And then you use the 9 as the gauge as the management as you work into the 55 to 60 handle. My bear of the week. Actually, I might have a different bear of the week in the scatter report meeting with Rapid Fire. Definitely pro members get excited for that. We got some clean charts out there this week. But Twilio here, good little bear play with continuation trigger.
I mean, when you brought it up, I was like, that's pretty good. I wonder where what you got that's a lot cleaner than that. So
I listen, I normally let you do. You guys are bringing some clean chart. Well done, gentlemen. Well done.
Thank you. Yeah, that's very clean. I like it. I like it a lot.
All right, Frankie.
All right,
I got a bull and I got a bear.
All right, so I got a bull and a bear. All right, I want to go Boeing, but I'm not going to go Boeing because I'm going to go with DocuSign. I think DocuSign has really shaped up really nicely this week and presents really interesting trading opportunity. We had that big drop on earnings, right? We rallied up into those moving averages. We had these guys on one of the reports, I believe options report last week, as it had kind of filled into that. And this week it's basically been a complete sideways move, right? And if you look at this on 30-minute or an hourly chart, Maddie, it gives us kind of that good old-fashioned textbook double top, double bottom. We just need to get that low taken out and we're ready to rock and roll. The trend's been broken. We failed at resistance. Now we're just waiting to fail at that support level. That's a clean entry in my opinion. A lot of good resistance working for you. Absolutely nothing of note from a support perspective, in my opinion, until we get back down into that recent low at $48, which heck, that could be our trade if we wanted to, but trend analysis takes us down beyond, that's T1, obviously, in that case.
That's a good T1 though.
But it's a great T1, right? I love when T1.
Well, it's a deep it's a deeper retracement with the K trade set up on the intraday. Your analysis is spot on, bro.
Continue. Yeah, exactly. That's what you want out of deep retracement, right? Because if it moves too fast, at least I'm too wimpy. I don't want to get in the day. It's ran up too much, right? I'm a coward. I want something else to develop, which takes time, which a lot of times I don't get. Getting it this week, I think, was absolutely a blessing. I think the best place for a stop loss is just up above those intraday highs, 59.50 ballpark. But if I did have to tighten it up, I think you can look at today's candlestick high as well. I'd feel a lot better personally with that, but everybody knows me. I'd rather give a little more room than I need than not enough when it comes to a stop. But I do think you have two legitimate stop options. I do believe one is clearly better than the other. I like 48 as T1 and down into that 41 range. I don't know if it's supposed to be 40 or 41 or 42. I'll call it 41, but into that low 40 range where we have those bottoms from late last year, there's just nothing here. I mean, you got that one ding of support, where the buyers came in after the earnings debacle. You got to respect that. Beyond that, I mean, it's those other lows. There's just nothing there, at least as of right now, which, is appealing from a risk reward perspective.
Yeah, it is appealing from a reward to risk perspective. Underneath 55 opens up to 50.48. I'd put that support zone in that 48.50 range. It's just volatility there, right? But the low point is kind of in that 48. It's a big boy trade. There's no doubt about that. Big boy trade for volatility purposes. So like the setup there, Frankie. Nice, good find there. All right, I'm gonna go bull.
I knew I was thinking the same thing. I was like,
I'm gonna go bull. But
I don't know what it
my
says about me and you, but it says we're on
it
the same
says a lot.
page.
It says a lot.
It says we're on the same page.
It also wait till you hear my name. So I went with Newmont first pick bull. I then went with communications for short and Twilio. And now I'm going to go with the consumer staple, and I'm going to talk about Walmart here because I think
Oh,
Walmart
baby.
needs to be talked about here. Walmart is entering into a little bit of a bull zone here where you're breaking back up above a 50 period moving average. It's got a clean breakout channel. It's a name that fits the moment. It is kind of where my head is at on Walmart right now. Don't get me wrong, I love the technical setup here, but one of the reasons I love the technical setup here is because it's a name that fits the moment. It fits the environment. It fits the conversation. I think back to 08 and everything that occurred in 08, and Walmart went up 22% in 08. And so it's one of those names that can attract a little bit of safety in chaos. Because guess what Walmart does? They sell cheap goods to everybody, like everybody. And so it's, again, a name that fits the moment. But what I like about it technically is I just like this little increase in support here, Frankie.
Oh, yeah.
These things matter to me as a
lot.
technician, where instead of running from 136 into that breakout and then trying to catch Walmart on a momentum trade, which is just silly sometimes when you're talking about a company like Walmart, you want to see that reset a little bit. You want to see that time come in. And we talk about this all the time on the halftime report. You know, how much time is it going to take for this to set up? You can't discount that time conversation. You can't force that on the market. You can ask for it, and if you get it, then fantastic. You ask for it, you get a little bit of consolidation here, kind of forms up that increasing support level at 139, gives that breakout a little more of that giddy up and go type mentality. Now, obviously, we're talking in an intermediate range here. You're going to have things that are left to the chart here, but I certainly do expect Walmart to work back up into this pivot point right here at about 147. Got another ding about 147, and then you open it up to about 150 there. So just really like the name right now to fit to kind of the environment, like the breakout on the daily chart. You come out to the weekly chart, you're going to see a whole bunch of stagnation neutrality. That's what you're going to see here because that's what Walmart's been doing. Once again, I'm looking at the daily chart saying, okay, we found the low here. We found the low at the 200. We found the low at the 9. Now we're breaking the 50. It's just you're in an intermediate neutral trend. And all you're saying is that Walmart's now, as it's breaking above the midpoint in that neutral trend, it's going to work back up into the top end of the range. That's all we're talking about here on Walmart. Entries above the high, stop loss probably underneath 140, right underneath that cluster of moving averages, and you're just working a 147 by 50. Once again, kind of that name that fits the moment for me. What's your thoughts?
Yeah, I like it. I'm glad that you brought it up because I was, when I ran into him, I was like, yeah, Walmart didn't, I didn't put as much thought into it as you did from a theme perspective, but the chart did, jump out.
I'm shocked by that, Frankie, that you
yeah. Go figure, right?
Shocked by that.
But I like the chart, and I think you're, the kind of the ideas behind it on top of that really makes a lot of sense.
Yeah, and
I love
it's not an aggressive trade, right?
Oh no, they don't all need to be aggressive trades, though, right?
Yeah, exactly. Okay, that's my two bulls and a bear there, Frankie. What you got?
All right. Well, listen, I got to go with Lily on the bull side. The simple reality is in today's market, I don't get a lot of opportunities to get good, clean pinches. I'm going to take advantage of it when I do. And that's exactly what we're seeing here on Lily. They spent much of the last week and a half kind of in that soup between that rising 9 and that falling 50. Heck, the flat 200 was there as the meat in the sandwich, right? But I'm really focusing on the 50 and the 9 here. And we're finally breaking through. And I know there's a lot of day left. Well, not a lot, but there's still some day left and anything can happen. But I'm going to operate under the assumption that Lily does end up closing above this 50-day moving average. That is what I need to see. Assuming it does close above that 50-day moving average, above today's high, whether that happens on Monday, Tuesday, Wednesday, Thursday, above that closing candle high is going to be my entry signal. Just want to get a little bit of follow through, right? Close of the moving average, follow through. I use 10% of an ATR, but whatever individual's rule is up to them, of course. What I love here, Maddie, is we got a wide open space into 348. That's where you're going to find a little price action, as well as the 20 weekly. That probably plays a role in the short term from a targeting perspective, whether, we want that to be T2 and just kind of work that window, or hey, when we get into there at T1, let's assume it's going to be a little bit of a fight. Let's hope it's not, but let's assume it is. But there's definitely some room if we can get through that. I mean, again, we open up until, the 354, 350, range.
Yeah.
So there's steps, right, on something coming off of lows like this, but you got a really clean first window to 348, nothing at all to scare me off into that 348. So that's going to be certainly a target zone, whether it's T1 or T2, probably depends on you.
Yeah, I think it's got to be T1. Number one, stock can move, right? That's 2 day. That's a 2 day type movement in the stock. And so I would say it's T1. I would say T2 is up in the mid 360s. Honestly, I think you could work into 362, 363.
Yeah. And I kind of had the same thought for T1, and for T2, I had it 350, at 354, kind of some old lows. But again, when you're looking back, there's always something, right? And some things might stand out a little bit more to somebody than somebody else, but you're really working in the same general windows. So you're gonna have really good risk reward. But I was kind of there with you, Maddie. I do think it's a pretty aggressive scale out at 348 personally.
Yeah, I think you got some work to put in at 348.
At 348, you're taking some profits. You're protecting profits one way or another, I would say. And then stop loss. The number one rule on pinches, for me at least, is your stop loss has to be below that 9 or above it. If we're playing to the downside, we're playing a bullish pinch here, obviously. So the stop has to be below the 9 EMA. Ideally, from a risk reward perspective, I can get it all the way below today's candle. That would be preferable. That does get me below the 9 and a little bit of intraday. And we had some price action there, early in the week, late last week as well. So I think a really good place for stops right around that 328 marker, just below today's low, below the lows that we've really been dancing with over the course of the last, week and a half or so. 348 is my official first target, and 354 is my official second target, but I'm going to be paying very close attention at T1. I do expect that to be a very natural place to stall out. Really expect that if I'm fortunate enough to be in that situation, I'm taking some profits fairly aggressively on a scale out.
Nice. Like it, Frankie. Well, we got 2 bulls and a bear here for both of us. Got some healthcare names, got some staple names, got some more conservative plays on the bull side, I would say, outside of that one aggressive tech play, which is
DOCU
open
swing. Yeah, it's a swing.
So,
it's a swinger.